Well, friends, Americans are buying houses this winter. Each week, inventory is falling and pendings are climbing. The market has fewer price reductions and more immediate sales each week. None of this is crazy hot like last year, but the data is pretty irrefutable. I've been calling this trend surprising, but I'm no longer surprised. It's been so consistent. I suppose the big question now is not whether people are buying homes, they are. It's whether this soft landing will last. Will a recession hit hard and derail the year's demand, or maybe the opposite, where continued strong economy leads to higher mortgage rates and a repeat of the ice cold second half of last year? So right now, though, it's super obvious the demand for homes is plenty strong for the current levels of supply. Every week, of course, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers, right now might be a good time to step up. Go to altosresearch.com and book a free consult with our team, because everybody is worried about what's happening in the market right now, and they need you to help them see clearly. There's a link in the description below to connect with us. The data we cover here in these national videos each week is available for every zip code in the US. So join us to dive in. I'm Mike Simonsen. I'm the founder of Altos Research, and here's what we know for the first few days of February 2023. Available inventory of homes for sale declined by another 1.8% this week to 457,000. It's not totally unheard of for inventory this early in the year to creep down for a few weeks. This year's change, though, is notable because inventory was rising so unusually fast in September, October, and even into November. If you're only watching the headlines, or if you like to watch like the real estate crash YouTubers, you'd be expecting now for inventory to be climbing each week, and it's simply not happening. Inventory across the country is declining because we have more buyers and sellers. The fact is we have very few sellers right now, and this trend doesn't seem poised to change direction either. So if mortgage rates stay roughly in the low sixes, we now expect inventory to keep declining for each week through February, it seems likely. Notice in this chart here, each of the last 2 years, inventory kept declining with that insatiable pandemic demand through February and even into March. You can see February 2021 here. I've highlighted where 354,000 homes on the market. And then there was still 8 weeks before the bottom of the inventory curve in 2021. But before the pandemic, see, for example, 2019 in this chart, I've highlighted here 816,000 homes on the market in February 2019. Inventory was already at its low point for the year in early February. And you can see the curve had already bottomed out and was getting ready to climb for the spring home buying season. So the last 2 years have been the exception, but it sure looks like this year will be more like the last 2 years than the pre-pandemic normal. Meaning inventory looks to keep declining for several more weeks at least. Next Thursday, by the way, we have our free monthly webinar. In that, we have time to share the latest forecast of inventory for the weekly changes for the rest of 2023. We're 10% into the year, so the evidence is already collecting and start to help us adjust the curve of our expectations for the year. We'll take the hour to dive into all the current and leading indicators in lots of local markets. So are the markets, for example, are the markets that got hit most dramatically last fall, are they recovering? So that's what we get to review. There's a link to register for the webinar in the description below. That's next Thursday, February 16th at 10 a.m. Pacific. Click the link below there to join us. These are limited to 1,000 people, and we have way more than that each month who want to join. So if you need to understand the market or you need to communicate the data to your buyers and sellers, click that and save your spot. Join us next week. This week, only 52,000 new listings came to market. Last year at this point, we had 58,000, so significantly fewer now. Plus, immediate sales are back to 20% of those new listings. Of those 52,000, 11,000 of them took offers and went into contract essentially within days of listing. In this chart, each bar here is a week with the total count of new listings, and the light portion of that bar are the immediate sales, those that are already in contract. And this tells us a few things. The good properties, priced well, go quickly. And that might be surprising, like if you're not in the market right now, but that is what is happening out there. It also tells us that there's no sign of any flood of homes for sale coming. There are no distressed sellers. There are no panicky investors. There are fewer move up or move down sellers even. So as a result, inventory will remain restricted. When the supply side of the supply-demand curve stays tight, that keeps a floor on pricing. So even though affordability of mortgage payments is dramatically worse than it was a year ago, the demand at these prices still turns out to be more than the current supply. On the demand side, we can see the pending volume way up over December and actually climbing rapidly. There are now 279,000 single-family homes in contract. That's meaning with the sale not yet closed. Each bar here is a week with the total count of homes that are in the contract pending stage. The light portion of the bar are those newly pending each week. So see at the right end of the chart here how quickly that pendings count is rising each week. There are 26% fewer pendings than last year, of course. But new home buyers now, that demand, are quickly narrowing the gap. Last year, at the end of the frenzy, we had 8% more new pendings in that week, that first week of February. So this is what we mean when we say that we have some home buyer demand. It's not crazy, but it is sufficient. And it's way better than it was in the fall. In fact, the price of the new pendings this week ticked up, and it's a little bit of sign of pricing strength, meaning the price of the homes in contract are flat year over year at $365,000. So is the median price of the single family homes in contract right now. And this reflects how strong the market was then and how much it cooled in the last 8 months. So remember that the pendings are sales that will complete in the future, 30 to 60 days in the future. And so it's one reason that we can see home sales prices are likely to stay flat for 2023 over 2022, the whole year. Prices are not falling, and those that are going into contract are flat year over year and not jumping from here either. So all the leading indicators are pointing to about flat home prices year over year for 2023. Meanwhile, the price of the active market, the single-family homes in the U.S., is essentially unchanged for this week at $415,000. So while we have tight supply, and I've been talking about, there's no pressure on home prices to rise, certainly for this year. So mortgage rates are significantly more expensive. And while we're hearing actually plenty of anecdotes about multiple offers on listings, we're not hearing about overbidding. We can start to see the trajectory of home prices in the dark red line here. And so prices climb every spring with the best new inventory. But prices, you can see, are already they'll be much slower to climb this year than last year. And again, that's a signal that while home prices are still more expensive than they were last year at this time, they'll finish the year flat year over year from the end of 2022. In fact, the price of the new listings, that's the light red line here. The price of the new listings are just 1% above last year when things were still rocketing. So that's $380,000. It'll be interesting to see where this goes next week. Will the new listings price be slightly negative year over year? Could happen because last year they were skyrocketing so dramatically. So this is not all home prices. It's a leading indicator of where the home sales will happen later in the season. Again, pointing flat for 2023. And price reductions are down to just 33% of the market now. So it's totally normal for a third of the market, of the homes on the market, to take a price cut before they sell. Totally normal. This is not a cold market. This is not a crashing market. This is not a market with panicky sellers. See the dark red line here? That's this year. It's declining quickly as buyers clear that inventory that maybe sat around in November and December. So if you had a house in the market in November and it didn't have any offers, you might have taken a price cut in December and now it sells. But if you are paying attention to like the headlines or the social media fearmongers, you might be expecting some kind of housing crash. So you can safely ignore them. The market is actually improving, at least by this measure, rather than weakening now. And improving meaning more demand, price stability, certainly improving over the ice cold of last fall. As I mentioned, next week, Thursday, February 16th, we have our monthly Altos Research webinar. We'll review all the details, much more than we can in these short weekly videos. All the leading indicators, all the latest forecasts for the year, and lots of local reviews. If you need to communicate to buyers and sellers, many of whom may have the wrong impression about what's happening in the market right now. So if you need to reach people, you should join us. Click the link below to reserve your spot. As I mentioned, these are limited to 1,000 attendees, and we have way more than that each month who want to join. So click below, reserve your spot, join us next week. If you need to dive in right now and get your local data, go to altosresearch.com. Just book a free consult with our team. We'll help you interpret the crazy market data for your people, your clients, your buyers and sellers. These are really critical times to be properly informed about the market. So join us. All right, more next week.